So three accountants walked out of the same London hedge fund together in 2018. Same firm, same week. What they built next is the only UK exchange where BlackRock, abrdn, Lloyds, State Street, and Federated Hermes can put real money market funds on chain under one license. $300 million of regulated assets live right now on Hedera through their rails. And the Financial Conduct Authority had to co-write a brand new rulebook to make it legal. Let's get into it. Archax 101. So let's set the scene. The company is Archax Limited. Company's house number 11302455. Incorporated on the 10th of April 2018 out of an office on Shelton Street in Covent Garden. Now here's the part nobody tells you. All three co-founders came from the same place. Omni Partners, a $1.4 billion London hedge fund. Graham Rodford was the chief operating officer and a partner there. Matthew Pollard, a chartered accountant, was the chief financial officer. And Andrew Flatt was their chief technology officer for 6 years. Same fund, same building, same week they walked out. Before Omni, Rodford ran operations at HSBC, Coutts Bank, and Leo Fund Managers. Pollard came out of Deloitte's investment management group, and Flatt had a decade building trading platforms across equities, commodities, foreign exchange, and bonds at Infinity Capital Markets. So this isn't a crypto-native team. This is the operational nucleus of a Mayfair hedge fund going, yeah, we're going to build something new. And listen to how Rodford explains why. Quote, "We believed every asset would eventually move on chain, but there was no credible, regulated counterparty, so we decided to build one." End quote. That's the whole thesis. They saw security tokens coming, they saw the regulatory gap, and instead of going offshore, they picked the UK and walked straight at the regulator. So they filed a Part 4A application with the FCA in 2019. 16 months later, on the 19th of August 2020, the FCA hands them 4 regulated activities, all granted simultaneously under one entity. Look, this combination had literally never existed before. They got a multilateral trading facility license, same regulatory category London Stock Exchange Group operates under. They got CAS custody permissions to safeguard client digital assets and cash. They got brokerage permissions, and they became the first firm ever placed onto the FCA's crypto asset register under the new money laundering regulations. FCA firm reference number 838656. You can look it up. They were also designated an SME growth market. 4 regulated activities plus crypto asset registration plus SME growth market status, all in one shot. And here's Rodford on what that journey felt like. Quote, "We have been talking to the FCA for a while, and the application process has been a tough journey, but we are pleased to have now achieved our first significant milestone." End quote. In another interview, he said it like this: "We had to demonstrate how existing rules applied to this new technology, and where the framework didn't fit, we worked with the FCA to adjust." So they didn't just get approved, they took the regulator on the journey. Day one technology partners were Aquis for the matching engine and R3's Corda for the blockchain stack. And on the leadership side, David Lester, the former chief strategy officer at London Stock Exchange Group for 16 years, joined as a non-executive director and advisor. So here's the part that surprised me. Archax does not run its own blockchain. They don't have a consensus protocol. They are an exchange, a custodian, a broker, and a tokenization engine that sits on top of every chain they support. And the tech under the hood is not crypto native. They license the Aquis matching engine, hosted at the Equinix LD4 data center in London. Same vendor stack London-listed exchanges trust. Order management comes from Quad Financial. On custody, Medico's harmonized platform on IBM Cloud. And here's the wrinkle. Ripple bought Medico for $250 million in 2023. So Archax's custody tech is effectively a Ripple product now. In 2024, they added Fireblocks on top, ISO 27001 certified. So what actually makes it different? Two things. First, they built a permission network called Nest. Nest is what lets regulated digital assets move as collateral between institutional counterparties, with real-time compliance checks and atomic settlement on top of public chains. That's what powered the Lloyds and abrdn foreign exchange collateral trade on Hedera. It also powers pool tokens, the first on-chain fund of money market funds anywhere. Equal weight abrdn plus BlackRock plus State Street plus Legal & General in one composable token. Second, and this is the angle nobody covers, Archax owns a subsidiary called Montes Digital. Montes was built, not bought. It's positioning as a DLT-native central securities depository. As of mid-December 2024, they hold a Bank of England Digital Securities Sandbox approval, Gate 1. Gate 2, required for live activity, is still in process, so not in production yet, but inside the BOE's regulated test environment, and Montes is chaired by David Lester. On the chain side, the engine spans 13 blockchains, including Hedera, XRPL, Stellar, Ethereum, Solana, Cardano, Aptos, Algorand, and Tezos, plus a Canton network footprint alongside Euroclear and LSEG. The chains do the consensus. Archax does the cap table. So let's look at the actual scoreboard. Right now on Hedera, through Archax, there are 6 asset managers onboarded, over 100 tokenized assets live, and more than $300 million of value tokenized. And the names are not random. abrdn led the Series A at $28.5 million and put a piece of their £3.8 billion liquidity fund on-chain through Archax. BlackRock gets exposure through what's called the Hedera Pool token, an equal weight basket of abrdn, BlackRock, State Street, and Legal & General money market funds in one composable instrument. That pool token is the first on-chain fund of money market funds anywhere. Federated Hermes tokenized the first UCITS money market funds through Archax in October 2025. Fidelity and State Street are both on Hedera, and Lloyds Banking Group used Canton plus Archax for the UK's first public blockchain tokenized gilt purchase in January. But here's the nugget mainstream creators miss. There's a Bermuda-regulated reinsurance fund called Members Cap, listed through Archax. Traditionally, a fund like that has a minimum in the millions. Through Archax tokenization, the minimum dropped to $50,000. Same fund, same target returns. Just opened up to a wider professional investor base. First tokenized institutional-grade reinsurance fund anywhere. And the pace keeps going. In March, the Cardano Foundation announced Archax is embedded in its tokenization stack. 2 weeks later, Aptos went live, bringing more than 100 tokenized securities on-chain. In April, Lingfeng Capital launched a digital venture fund on the London Stock Exchange's digital markets infrastructure platform, with Archax providing the wrapper. First tokenized venture capital fund on the rail. Then on the 6th of May, the UK Carbon Registry partnered with Archax to launch a tokenized carbon credit-linked security, listed on SIX Swiss Exchange with a 10% fixed US dollar coupon. First regulated tokenized carbon credit security anywhere, plus clear bid for bond auctions, OpenPaid for multi-currency settlement, trading stack for fixed connectivity, and Archax was the UK on-ramp for Ripple's RLUSD on launch day. The receipts are visible, on Hedera, on Canton, on the LSE's own infrastructure. So here's the part that genuinely surprised me. Archax tokenized uranium, actual physical uranium. In December 2024, a marketplace called uranium.io went live on Tezos, backed by physical U308, the yellow cake oxide, stored at Cameco, with Curzon Uranium as the trading partner and Archax as the regulated tokenization and custody partner. And listen to how Archax frames it in their own press release. They say the product is, quote, supercharged by recent substantial investments from major technology companies grappling with the enormous energy requirements of artificial intelligence infrastructure, end quote. They literally call uranium the critical element driving the AI revolution. That's their wording, on the record. So when people ask if Archax is in the AI story, that's how they answer. Through the energy stack that powers the data centers training the models. On geography, look at the last 12 months. In March 2025, they bought GlobaCap Private Markets, a FINRA-licensed broker-dealer and SEC-registered ATS, rebranded Archax Markets US. In October, they partnered with T0 for cross-listing between the UK, EU, and US. Their Spanish broker became Archax Markets Europe. They bought Deutsche Digital Assets in Frankfurt, and they opened a Dubai DIFC innovation entity. Hong Kong, Singapore, and Australia applications are filed. In February 2026, the first privacy-wrapped tokenized funds went live on Silent Data, with hardware-enforced confidentiality on a public chain, covering Aberdeen, BlackRock, Fidelity, and State Street money market funds. And the target Rodford has put on the record, $100 billion in assets under administration tokenized by June 2027. He told Crypto News, quote, "We think every asset is going to be on-chain in the future," end quote. So look, Archax doesn't try to be a chain. It's the regulated venue, the custodian, the CSD applicant, sitting in the middle, letting every other piece of the institutional stack plug in. So pulling it all together, 3 accountants walked out of a Mayfair hedge fund in 2018, talked the FCA into co-writing a brand new digital securities rulebook, and built the only UK exchange where BlackRock, abrdn, Lloyds, and State Street can put real money on-chain under one license. They don't run a chain, they built rails. And those rails now carry money market funds, government bonds, reinsurance, venture capital, carbon credits, and yeah, even physical uranium tied to the AI compute story. The rulebook, the rails, the partners, they're all live. The chains do the consensus. Archax does the cap table. If this was useful, hit subscribe. We go deep on the institutional layer every week. The full Notion blog with sources, dates, and quotes is linked in the description below. Drop a comment with which traditional asset class you think gets tokenized next. See you in the next one.